Hello, my name is Deb Gerber. I'm a certified public accountant with the Small Business Development Center located on the Idaho State University College of Business campus. The SBDC offers free consulting services to businesses who are just starting out, need financing, help with developing a business plan, web and graphic design, and of course accounting and taxes, which is what I do. So today I wanted to talk to you about tax tips for your 2020 tax return. And this particular segment is about small businesses. That would be a sole proprietorship, a one-owner LLC, or even a partnership. So let's talk about the things that would go on your tax return first. Always, of course, would be income. The income would be from services that you perform to generate your business income, or from the sales of products that you make, manufacture, or buy for resale. And there could be also interest and some capital gains or losses if you sold assets. That income is separately stated from the expenses. Now let's talk about the expenses. The expenses, first of all, start with the cost of sales. So if you manufacture or buy for resale, then the cost of the raw materials or the purchases that you make to resell are deductible as cost of sales. If you have cost of sales, you have to keep track of your inventory. That's the inventory of your raw materials at the beginning of the year and at the end of the year. Or if you've produced product and haven't sold it yet, inventory the produced product at the beginning of the year and the ending of the year. To get to gross profit, you take the income minus those cost of sales to get to gross profit. And then from gross profit, we're going to deduct the expenses that most everyone is familiar with. Those expenses come to me if you were having me prepare your tax return in totals by category. Categories are things like advertising, accounting, bad debts, bank charges, computer expenses, internet expenses, insurance, legal expenses, travel, employee wages, employment taxes, utilities, supplies, office supplies, rent, and things like telephone and those kinds of things. Now, I didn't mention your automobile expenses yet, because the automobile expenses can be deducted in one of two ways. You could do the standard mileage rate, which is a rate that is identified by the IRS at the beginning of each year. Or you could do your actual expenses. The standard mileage rate covers things like the price of your vehicle, the insurance, the interest you might be paying on your vehicle, the repairs, oil, fuel, and the cost to wash your car. Those are the same actual expenses that you would be deducting if you chose the actual method. The thing you need to know about standard mileage, the standard mileage deduction, and actual is once you've elected or chosen a method, you have to stay with that method for as long as you own that vehicle. The actual expenses are based upon the amount of percentage that you use for business. So if you have your personal vehicle and you're picking up and delivering product, you're taking things to the post office to deliver for sending to your customers, the amount of business use of that vehicle, say 70% business use and 30% personal, only 70% of those actual expenses are deductible. Where if you take the standard mileage rate, it's the actual mileage that you use to perform your business. Now, there are apps for your standard mileage rate, which make it easy to keep track of your mileage. The other thing you need to know about standard mileage rate is that the record, the travel log, has to be contemporaneous. In other words, you have to do it as you're doing your business. And that's pretty hard for most business owners to do. So the app is a good option. The only downside is you have to be able to print the results at the end of the year, because the IRS requires your travel log to be in written form. And as a tax preparer, I have to see the mileage log. So let's talk about meals, because that's kind of another area that, while it's deductible, has some unique characteristics. If you're a business owner and you are in travel status, in other words, you are out of town overnight, Then your meals can be deducted in a per diem basis by the number of nights you're out or the actual expenses. And then there's another limitation that your tax preparer would help you take. You can pay for meals for your employees if it is helping you do your business. For example, in the tax practice on the long days, sometimes the owner will bring in pizza to help us keep working. So she could deduct the pizza because she provided it to her employees to keep them working. Entertainment, that's unique because you have to be able to document what the business discussion was if you take your client to a football game, either before, during, or after. You have to list the names of all of the people who were there and the date, the time, and the amount. In other words, you have to document meals pretty substantially, whether they are out of town or for entertainment or for your employees. Another expense that you could deduct that has a unique component is lodging. This means you're away from home overnight doing business, and you could use the per diem method as that as well, or the number of nights that you're away, or the actual cost of your lodging. Another expense a small business owner may take is a deduction for office in the home. Office in the home has two methods that you can choose. One is the safe harbor method, which is based upon the square footage of the use of that room to the square footage of the entire home. To deduct office in the home, the room has to be for the exclusive use of your clients and for the business. The deduction for office and home has to be for the exclusive use of your client or for your business. In other words, it can't be a bedroom that you've converted into an office by just sticking a desk and a computer in the room. Nor can it be the family room where a corner of it has the desk and the computer. It has to be for the exclusive use. The other method is the actual method, which is based also on the square footage, and that is things like your utilities, your insurance, your interest, and depreciation of the home for that square footage of that room. Once you've elected a method, you need to stay with it.